Hi everybody, it's FIBO Group, and you are watching to the Market Watch review. It's all about data. Investors are trying to determine how severe U.S. rate hikes are, whether inflation in the Eurozone is at an all-time high, and how detrimental China's COVID lockdowns can be for the world's number 2 economic power. Markets have become more cautious following gains in Asia. The dollar's rally is now in reverse after it reached 2-decade highs. It has fallen 3% against a basket currency, while the euro has rebounded and is at a 1-month high. The U.S. stock market is set to end its longest losing streak in a week in decades. A pullback in Fed rate expectations could help the Nasdaq, a tech-laden Nasdaq, recover. Oil prices rose Friday and are on track to gain weekly gains. This is due to a tight market, a result of rising gasoline consumption in the United States, and the possibility of an EU ban of Russian oil. WTI is expected to gain about 1% each week. Asian Pacific market. Fumio Kishida, the Japanese Prime Minister, stated that capital gains tax was a continuing topic of discussion in Japan. This is despite investors' backlash against an idea they had previously abandoned. The Japanese yen is consolidating in yesterday's range. Australian retail sales reached record heights in April as holiday shoppers spent large. However, rising inflation and higher interest rates continue to erode spending power. The Australian dollar is trying hard to gain traction above the 0.7125 level. Market of Europe. The euro area inflation is expected to rise to 7.6% in May against 7.4% in April. A flash estimate of Tuesday is expected to show. This should make it clear that the European Central Bank will resume normalizing policy on June 9. Markets and economists expect a 25 basis point increase in July, but a strong inflation print could fuel talk about a larger move, which some ECB officials have been pushing for. The euro failed to climb above 1.0750 and fell. We will see if it breaks the local uptrend, or if it is just a correction phase. Market of America. Markets are coming to an end of a turbulent May. U.S. payrolls and European inflation data, as well as Chinese business activity data, could set the tone for June. Friday's U.S. jobs data could reveal whether the Federal Reserve's 75 basis point cumulative rate hikes from March are being felt in a strong labor market. However, any signs of softening in employment market will not slow the Fed's determination to raise rates as high as necessary to squash inflation. Fed Chief Powell admits that this will cause pain. The support level for the U.S. dollar against the Canadian dollar is near the 1.2720 mark. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.